I'm Lorenzo Gonzalez, and today I'm going to be teaching you about trading stock and how you could benefit as a member of society. When most people think of trading and stock, they think of rich people, the Wolf of Wall Street, or Wall Street, often painting this picture that in order to trade stock, you either need lots of money or lots of knowledge on the topic. And while although this is partially true, today with technology, it has become a lot easier. A lot more knowledge is out there on the internet, and it's all publicly available for you to see. You can also now trade from the comfort of your house or your phone, and literally a click of a button. You can go from brokerages to Top Step, which is a prop firm where you have to work hard to basically show that you know how to trade, and then they'll give you money to trade with. Or you can trade from things like Robinhood, which are big brokerages, and you can use your own personal money. For me personally, I am a day trader. I am a funded trader, which out of 100,000 people, only 12% will reach. But that is a lot harder to reach, obviously, because you need to know how to trade in literal hours to minutes as the market's constantly moving. It's a lot more strategic, whereas there's swing traders which buy at very lows or certain lows, and then they hold to a certain profit target or percentage. And this is the same then for long-term trading, the most popular form, where people will buy stocks and they'll hold them for 10 to 20, maybe 30, even 40 years. Now you might be asking yourself, this is cool and all, but why is this important to me? Because you're most likely a young person who's working, and if you don't have any bills to pay, this is the perfect time to invest. Um, Especially for those, like, I mean, really, well, the stock market's everything around you. It's everything from the t-shirt I'm wearing, this Nike symbol, to the Apple iPhone in your hand, silver, gold in your computer. All of it is around you, and it's constantly moving. And it's really important because these companies all start off small, such as Apple, but over time they grow. Like those that saw Apple's potential in the early 2000s, they were able to profit off of it and make 50 times what they bought it for because they saw its potential. And that's important. And while although this might seem simple, back in the day, people are called brokerages, and these brokerages weren't always transparent. And because of this, if you didn't know a lot about stock, you could get hustled into buying some bogus stock. But now today, with the advancement of technology, you can go on things like Robinhood and you get to call the shots and place the stock, buy it, and then it goes sent all the way over to an exchange. And this is important because it gets sent usually exchanges such as the New York Stock Exchange. Why do I mention them? Because since 1917, the New York Stock Exchange has become one of the largest stock exchanges in the world. It is home to over 2,000 publicly traded companies, and it's valued at 20 plus or $25 trillion, or over $25 trillion. Sorry. And this is also very important because researchers suggest that because of this, over $200 billion daily is pumped into the stock market. Now, why does this matter? Because this is what creates trend lines. As you see here, this is a bullish and a bearish trend line. Well, let me explain first. The U.S. Securities and Exchange Commission explains that these buy and sell orders people send is price discovery, basically people determining what they're willing to pay and trade for. This then creates these trends: bullish trends, which are uptrends, and bearish trends, which are downtrends, lower lows and lower highs. These usually happen during recessions or major global events. Now, why is this important? Because global events are what determine how the stock market moves and how it operates. For example, the stock market within the United States, well, the stock market in general is moved by the United States. So when events happen towards the United States, the stock market is usually largely affected. According to the National Bureau of Economic Research, the disease outbreak, COVID-19, had a much larger significant impact than any other pandemic ever on the stock market. And from personal experience and data, and just by observing the stock market, I can say that this is completely true. We had seen some of the biggest lows over in a decade, and people lost a lot of money because of this. There was a lot of fear within the market, and there was a lot of people that got scared. When productivity usually is impacted negatively or disrupted and crises take place, people get fear. They decide to pull out of their stock, and stock usually loses a lot of its value. And this is really important because it ties into psychology. Often fear and panic leads to people selling their money and acting irrationally. And this really just causes people to lose a lot of money. My teacher, for example, he had, I think, over $100,000 in stock, possibly $500,000 in stock, and he would tell us that how he was down 50,000 to 150,000 in a day. That's insane. Or over the span of a week. And he was like, no, I'm not going to sell. No, I'm not going to sell. But other people that did sell, they lost out on their profit. People that saw this, though, and saw that it was only a temporary event, they were able to profit off of this by buying at that low and then selling up to today and making their money's worth quadruple sometimes at some points. This is important because it ties back into psychology. Like I said, according to the National Library of Medicine, investment decisions are often influenced by institution decisions, but also by psychological behavior, a field that integrates cognitive psychology and the financial theory to explain irrational based emotion aspects of investors' influence on investment decision making. This is important because it shows that trading isn't just some strategy. It's not just some strong strategy or solid strategy. It's also psychology. And if you can't keep calm, cool, and collected, you're going to lose money. So some of the best traders on Wall Street say that in order to be a good trader, you have to look at trading and stock like it's just analytics, like it's just numbers on a screen. Basically desensitizing yourself from the fact that it's money. And in doing so, you'll become a lot more profitable and successful. Thank you for your time.